Good morning. It's Thursday, the 26th of September, and this is Govindraj Ethiraj, headquartered and broadcasting and streaming usually from Mumbai, India's financial capital, but in transit now. Our top stories and themes for the day. The markets hit highs for the fifth consecutive session. More mutual funds switch to cash. Global stocks are not enthused by China's bold stimulus moves. India needs foreign direct investment in manufacturing, says the Asian Development Bank. India is finishing up with a strong monsoon. How good was it economically? The 100-hour concept. Hyundai's 24,000 crore initial public offer is revving up. What will it do to the market? And an Italian bank raids a German one and hell breaks loose.
This is the Core Report with Govindraj Ethiraj.
The markets resume their role. So the stock markets on Wednesday resumed their role and hit lifetime highs for the fifth straight session. And while the financials, that's the financial stocks, largely set the pace, interestingly, the small cap stocks fell again, seemingly confirming the growing view that most institutional investors are switching to large cap stocks and out of smaller ones. The day itself began on a somewhat tepid note, with the indices quoting lower but only turning around in the last hour of trade, a pattern that actually we've seen before. What that means is that a weak start does not necessarily mean a weak end, but the converse could hold true too. So the Nifty has hit new highs every session since the 50 basis points rate cut by the US Federal Reserve last week, which has opened up, as we said earlier, some fresh taps and pipelines of capital flows. So the BSE Sensex was up about 256 points to close at 85,169 and scaled a record high of 85,247 during trade. The Nifty 50 touched an all-time high of 26,032, but closed up about 64 points to 26,004. Mutual funds are holding more cash. India's equity mutual funds are holding more cash relative to their asset size, and that figure rose to a 5-year high at the end of August, according to Reuters. The reasons could be many, but broadly could be ascribed to increased caution and the desire to wait longer for well-priced buying opportunities. Morningstar data quoted by Reuters says active equity funds in India with a fund value of at least $1 billion held an average of about 5.4% of their portfolios in cash as of end August, and that figure is the highest in 5 years, as we mentioned. Could valuations be one reason? Well, some people, or rather most people, seem to think so. The forward price to earning ratio for the MSCI India's large cap index is about 23 times. That's roughly 19% premium to the 10-year average. While the MSCI India mid cap index is trading at hold your breath, 68% premium, and the small cap index is trading at about 40% premium to their respective 10-year averages. So, the problem, if you want to call it that, is clearly in the list small cap and the mid cap space. It's also this space which could see corrections which are in some ways to be welcomed, because a consistent rise is always worrisome, as we've discussed before on the Core Report. Corrections also provide the holders of cash, the big ones, to come in and start buying. On the other hand, if everyone holds on to their cash, then the markets start to stagnate in some ways or move sideways, which might be a nicer way to put it. And elsewhere, oil prices are sliding again despite the heightened tensions in the Middle East as demand worries outstripped risk perceptions. Brent crude was quoting overnight under $74 or $73.71. How's China's stimulus faring? Well, I asked myself this question a day before. Will China's stimulus be a game changer of sorts and reverse the bearishness in and on the economy as we've been seeing? Well, the problem, as they say, is that it's tough to revive with stimulus measures when the fundamentals are weak or need much longer to find their footing, like China's troubled real estate market. Stocks struggled on Wednesday to maintain momentum fueled by China's monetary stimulus measures, with crude oil retreating and the dollar under pressure, according to Reuters. European stocks were broadly steady, and oil and gas shares led the losses, falling about 0.5% on concerns that China's stimulus plans would not do enough to boost demand. Wall Street was flat too, but then remember that the S&P 500 and the Dow Jones had closed at record highs for the second straight session on Tuesday. There is now an expectation that there will be another 50 basis points Federal Reserve rate cut at the November meeting. That's next month, or rather the month after. India needs FDI in manufacturing, says the Asian Development Bank. Back in the region, the Asia Development Bank has projected strong growth for India's economy, forecasting a 7% increase in GDP for the current financial year in its September 2024 report. These figures are higher than some of the other projections by other rating agencies, for instance. Now, ADB officials said India's economy has shown remarkable resilience in the face of geopolitical challenges and is poised for steady growth, according to that report in Business Standard. Agricultural improvements will enhance rural spending, which will complement the effects of robust performance of industry and services sector. All of this would be helped by above-average monsoons, though the ADB is also projecting higher consumer inflation driven by higher food prices. The ADB also believes that the employment-linked incentives for workers and companies could boost labor demand and facilitate job creation starting next year. Like JP Morgan earlier this week, the ADB also made a case for boosting the manufacturing sector, but with increased foreign direct investment, which may bolster growth and investments. The 100-hour principle. Speaking of rains, it boils down to a 100-hour game. More on that shortly. The retreat or withdrawal of the monsoon has been officially announced, but in Mumbai, just to add some flavor, last night it was pouring like there was no tomorrow, and that's all of last afternoon and evening. Hopefully, this would be the last of the rains. Yes, I would think most Mumbaikars have had enough for this season. On a more serious note, what was the cumulative impact of the rainfall season this year on the cropping and agricultural patterns as well as economically? I reached out to Devendra Kumar Pant, Chief Economist of India Ratings and Research based out of New Delhi, and I began by asking him how he was reading the sum total of the 2024 monsoon season.
If you look at the monsoon and the data till 24th or till today, it is, or released today, so it is still till yesterday, overall monsoon rainfall is 5% above normal compared to the normal till this date. At June, it was 3 week, 11%. And the regions being, so now El Nino, La Nina is a common word because still the El Nino was in withdrawal phase till end of July, and post that the La Nina started, and La Nina always brings more rates to India. But what is more important than El Nino and La Nina is another weather pattern, which is the mean sea surface temperature difference between Bay of Bengal and Arabian Sea. So we have seen some years when the El Nino pattern was there, moderate to strong. And because of very strong Indian Ocean dipole, India still had good rains. So this is just to put in perspective the El Nino and La Nina. So post-June, rainfall started intensifying. We had strong rains, I think, except the East India and some part of Southern India. The monsoon rainfall has been more than. Now, yes, there are heavy rains in the month of August, early part of September, and that will have some impact on the crop which are on the field. But if you look at the statements and other discussion with the ICAR scientists and others, it gives an impression that it is not very strong impact, or the adverse impact is not very strong. Now, if you look at compared to the last year, the monsoon has been better. And more importantly, which is going to give us benefit in the rest of the year is because generally we have 80 to 90% of the rainfall which we receive entire year is during June-September period. October, December, we receive some rainfall in the northeast, some parts of Tamil Nadu and Kerala, but the rest of the country have these 4 months. And in fact, if you look at it, it is 100 hours of rain, which is giving us our lifeline. Lifeline in the sense we still have the agri, though maybe around 16-17% in the GVA, but the dependence on the employment perspective. Now, what these late rains have done, yes, it has some impact on the Kharif harvest, but we don't have any rainfall during the Rabi season, Rabi or winter season. And those crops too is they use the retained soil moisture after the Kharif harvesting is done. So whatever the moisture the soil has, and B, the kind of water storage in the reservoirs. If I look at water reservoir, 155 water reservoirs in India, and as per the bulletin which was released on 19th of September, the rainwater storage was 123% of the last year, or 23% more than the last year. Or if you look at the normal, it is at 18%. So what it has done, it has brightened the prospects of Rabi, unless we don't have any adverse weather pattern, say for example, extreme heat wave conditions that we had seen during May and June in the country. But if we don't see those kind of extreme heat conditions, we will have better prospect even for your Rabi. Another point is, if you look at the cropping pattern, both pulses and paddy is showing higher sowing this year compared to the normal area. So that is also a positive side for the economy.
Right. Okay, so let me pick up one of the points that you made. So, agriculture impact, you're saying, is neutral to positive. If you were to now look at broad economic impact, I mean, where it translates into, let's say, consumption, more agricultural income, how are you seeing that?
If you look at, and along with this, we did along with government and basmati export, both you have to club it. So when I say neutral is from the kharif production. But if you look at last 10 odd years, what we had seen earlier, the kharif agriculture production. I'm saying agriculture, it's not the grade, it's not the food grade. The overall agriculture production during kharif used to be higher than rabi, but now rabi is higher than the kharif. So if the rabi estimates better, then the farmer income is going to increase. B, what we are still struggling with, and there are different views. We have monetary policy 15 days down the line. 6 wise men will look, debate for a couple of days and then decide how the monetary policy should be in the next, at least next 2 months. So it is framed basically looking at year and a half. The food inflation is one thing which has remained very sticky. So is it that your food inflation is going to decline? What kind of impact it is going to have, because that will have your overall inflation going. And why inflation is very important, because if you look at our consumption, right, the response of consumption to overall GDP, also to the income, is very strong. And that strength is building over time. So if I look at 1952 to 2024, right, whatever is strength got, the strength in this century has 10% higher than that period. So that is strong. But what happens is, we have to look at the real income. Now, you have the real income going up, you will have the consumption going up. Now, real income can go up by many different combinations. One is your nominal wage growth goes up, your inflation remains same, you will have a higher real income. Your nominal wage growth remains same. This means no impact on the balance sheet of government, corporates, or any other economic agent. Nominal wage growth remains same, but the inflation goes down by 0.5 percentage point. Now, that will have a very strong impact on your overall consumption. So, a better agriculture means 50% of the workforce. Unfortunately, we don't have census after 2011, and we're still looking at those numbers, and I'm not going into that debate why I didn't have it. All of us know, because that was a COVID impacted year. Your 50% of the labor force is likely to see a better income growth in the fiscal year 25. Our estimate is, compared to 1.4% agriculture growth in fiscal year 23-24, the agriculture gross value addition growth in 24-25 is likely to be percent, and it will surpass that. And that will have the impact on your consumption demand, on the government in terms of taxes, because personal income demand will increase, the industrial growth will increase, and that will have impact on the government balance sheet also.
Right. Okay. Devendra, we've run out of time. Thank you so much for joining me.
Thank you.
Hyundai's IPO is all set. Hyundai, India's second largest car maker after Maruti Suzuki, will raise about $3 billion at 24,000 crore rupees, valuing the company at around $18 billion or about 1.5 lakh crore rupees. That IPO, as and when it happens, would overtake the 21,000 crore public issue of the Life Insurance Corporation of India, which was launched in May 2022, at that point being India's largest IPO. What a $3 billion IPO will do to Indian markets is anybody's guess, though I would cross my fingers for the market and for the IPO, given the sheer volume of offers that have hit the market and the amount of capital, particularly from retail investors, it's sucking up. Nevertheless, it's an important signal in as much as a MNC is listing in India after a while, as I could see, and we've surely not seen anything like this jumbo offering. A local listing also reflects a tighter lock-in with the domestic market and the confidence to grow it independently of the parent, at least to some extent. So as of this point, the Japanese via Suzuki and now Hyundai, that's the Koreans, would have listed entities in India in the auto manufacturing space. The Hyundai IPO will be an offer for sale of about 142 million shares or a roughly 17% stake by its South Korean parent Hyundai Motor Company. For Hyundai, India is the third biggest revenue generator. The company has already invested about $5 billion in the country and has committed to pump in another $4 billion, according to the Economic Times. Hyundai is more of an SUV company in India with 8 SUVs in its portfolio of 13 cars with a 20% share of India's total SUV sales, the ET said, quoting IPO papers. So there are lots more on the figures, but I'm going to hold that for a date closer to when the IPO is going to get launched. But if that share sale is priced at about 2,000 rupees per share, it means the IPO could raise about 28,000 crore rupees, obviously higher than that LIC IPO of 21,000 crores. So Hyundai does about 14,000 crores of revenue from exports and about 33,000 crores of revenue from the local market. So add the both, that's about 47,000 crores of top line. Some of the funds raised are likely to be used to enhance capacity to over 1 million units across its facilities in Tamil Nadu, where it's traditionally been, and Maharashtra, where it's coming up, to develop new products, including affordable electric vehicles, over the next decade. The Italians launch a raid on the Germans. The European Union seems like a happy family, well-knit financial union and seems to be acting in concert on a host of economic and business issues on most days. That is changing. There's much consternation in Germany after an Italian bank, UniCredit, launched a takeover attempt on Commerzbank. The reaction it has provoked seemed to be akin to an ICICI bank or an HDFC bank or even a State Bank of India being acquired by a foreign bank, for example, a Chinese one. And then imagine the Prime Minister Modi and the Finance Minister stepping into the fray saying that they oppose this takeover. Well, this is exactly what's happening in Germany. German Chancellor Olaf Scholz and his government are rallying to the bank's defense after UniCredit moved to create a banking major with about $1.5 trillion in assets, according to the Wall Street Journal. So the deal is like this. UniCredit is seeking to double its holding to about 21%, has already got about 9%, which it got hold of earlier this month in a somewhat unanticipated move after the German government itself sold stock, which in turn it was holding thanks to its bailout during the 2008 financial crisis. So the German government stake is now down to 12%. UniCredit is Italy's second biggest bank, while Commerzbank is the third biggest by assets in Germany. Combined, they would have ranked about 10th in Europe with assets of about $1.4 trillion, according to S&P Global Market Intelligence, quoted by Wall Street Journal. The biggest, that's HSBC, has about 2.6 trillion euros in assets at that time. Speaking in New York, Chancellor Scholz said unfriendly attacks, hostile takeovers weren't good for banks. A spokesperson for the finance ministry said Germany's government supports Commerzbank's strategy of independence. They do not support a takeover, and they've informed UniCredit of this. The negative reaction has come from politicians and union leaders who are upset with the likelihood of giving up financial clout to Italy and depriving smaller businesses of funding, according to the Wall Street Journal. As things stand, the European Central Bank, which regulates major European lenders, has to approve any purchase of a bank stake of 10% or more. Germany has also said it won't sell any more of the bank stock for the time being in what was seen as a warning to UniCredit to back off. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.